Hi guys, and a warm welcome to this recording here, where I'm going to be talking about dollar index. So it's going to be a two-part series. On the first one, I'll be talking about dollar index. What's my forecast? What are my expectations in terms of price movement in regards to dollar for the next 2-3 months or so. So if you remember correctly, I think a couple of months back, I think it was end of January or end of December, I can't remember correctly. I shared with you this this chart here that you are looking at, where I reiterated that for the bears to be quite strong, we need to clear this down close candle here, which was our monthly bullish order block, and we have seen February finding support after running what sell stops below January low, and in turn you can see that January now has become another bullish order block on the monthly, though both of them are not high probability order blocks, right? Remember, we need a fair value gap to accompany the OB for it to be a high probability order block, and that is not the case in this scenario. So I was expecting dollar to at least take out December highs, the liquidity above December highs, but that did not transpire, and that's a clear telltale sign that the bulls are not really quite strong on dollar index. The bulls are not quite strong, right? Though it does not hurt to be a buyer from discount range, which is where we are currently, but I'm really not advocating for strong bulls here, right? I'd rather wait for price to come into premium before we can look for shorting opportunities. Like what we have seen recently, we have seen price finding resistance around the old low of what is this month here? So this is March, Feb, Jan, December, old low of November. So we have seen price finding resistance on an old low as far as November, right? So be that as it may, I do still think we are going to see a weak dollar for the rest of the year. Dollar is really gonna go to the downside. That's my focus, guys. That's my analysis, which I'm sticking to that narrative. That's the narrative that I have in regards to dollar, and that's the narrative that I've been pushing since I think November, since we started getting the rate increase to fight inflation. I've been advocating for a weaker dollar and a strong euro in 2023, and that hasn't changed, right? So looking ahead in terms of our bias, yes, I still remain a dollar bear. I still remain looking for weakness in dollar, and as you all know, this week we've got FOMC, we've got our Fed rate decision on Wednesday, 8 p.m. And I don't think much has changed, right? The market might be advocating for a rate cut or even a pause at this moment in time, but I still feel like 50-50 we are going to get a 25 basis point rate increase. Now, what does that entitles in terms of dollar index, right? So inflation is still high according to the Fed, but they are well on course for their target, most probably 3.8% by end of the year. So we are really going to see the Fed sticking to their narrative of rate increase, most probably in the 2 or 3 meetings to follow. Then from there, everything will be data dependent. As it is right now, they are leaning more on data dependency on the decision that they are making. So where do I expect dollar to trade to? So you can see we've got this old high here, right? This old high at 103. Above 103.810, the bulls will likely be quite strong. January opening price has been a very strong support level in terms of discount, but as you can see, we are dipping now right into the bullish order block from January, and also this down close candle here, right? So I would say that internal range liquidity of sell stops will be the draw on liquidity. I expect price to move lower. Move lower from where? From a premium level, from premium areas. That's where I'm looking for dollar to find resistance for a further push to the downside, right? So March close is going to be very important. It's going to be critical for the bears in relation to where exactly we are looking for price to trade to. So this market inefficiency on the monthly chart between 99.44 and 101.30. This market inefficiency is the draw on liquidity. Though we've got also market inefficiency in premium here, but I expect this one to just be a what? A resistance provider in terms of price movement. So yeah, I'm looking for dollar to trade to the downside from a monthly point of view. Now, when we go to the weekly, right, on the weekly, we still have the same levels highlighted, but there's one thing that I would like to illustrate, guys. There's one thing that I would like to illustrate. You see this series of green candles here, right? This bullish candle, 4 weeks, dollar bulls. They weren't that convincing, in terms of price expansion to the upside. These bulls were not that convincing. Take example of this one here. See these dollar bulls here, right? After a drop to the downside, we had a dollar bull rally, right? Now this is a more convincing price action that tells you that the bulls are quite strong. See, the fact that we had this big bullish candle here, huge volume of buying dollar, taking out 1, 2, and 3 down close candle, that gave emphasis to this rally that we saw on dollar. We are not seeing that here. You see, we didn't see it in any of these 4 bullish candle. It would have been actually much better if either this candle or this bullish candle here would have rallied to the upside, taking out 103 internal range buy liquidity of buy stops, buy side liquidity of buy stops above 103. It would have been nice for it to be like a one big bullish candle. That way would have seen or would have concluded that the monthly bullish order block is going to be quite ideal in terms of supporting price to rally to this market inefficiency on the monthly chart. But that's not what we saw. So this series of bullish candles on the weekly chart, all they did was trade to premium levels where they're now finding what? Resistance, and a bearish momentum is likely resuming, targeting this level right here. See, I hope you understood what I've just explained there. Remember, it's not just a case of looking at your arrays, looking at your fundamentals. It's also actually good to interpret what price is telling you in terms of candlestick patterns, in terms of volume imbalance, in terms of where momentum is. in terms of price action. Are we seeing big bullish candles to the upside? Are we seeing big bearish candles to the downside? So it's always good to have that as an option for you to understand what price is actually telling you. So right now I'm anticipating 99.44. We just round off to an institutional price point of 99.550. That's where we got this bullish breaker here above an old high. So yeah, we're still going to see further moves to the downside. So on the weekly chart, yes, dollar bears are quite strong, and the bulls are a bit of lagging, as in not lagging as such. They don't have that much momentum, for you to really say, okay, no, price is gonna move to the upside. Take note of these old lows here that I've highlighted with the dotted lines. Got an old low. The blue line determines your old high in terms of monthly price levels. Look at this old low here from I think that's November old low. Look how price found resistance. Price came back to that level. Initially we got a bearish breaker here, right? Price came back, filled up the imbalance, and then it dropped. Came back, old low, premium array, price dropped, takes out internal range liquidity of sell stops, and then we had this sort of like a slow bullish momentum. All it did was trade back again to that old low, which is now our premium array, and price found resistance and drop to the downside. So when we drop down to the daily chart, right, when we drop down to the daily chart, you can see this is the old low that I'm talking about. You can see here, this is where we found resistance and drop. We came back to that level, found resistance and drop. The same level, found resistance and drop, right? So as long as price is trading below 103.810, I would maintain that the bears will actually be quite strong in terms of pushing price lower. So you would need to short dollar on negative fundamentals or positive news from euro for you to be sure of your position, for you to be sure of your trade, right? So as it is on the daily chart, you can see here price is targeting this market inefficiency here from this green candles high and this low. Let me just highlight that. So yeah, we might have price giving us like a very strong monthly bullish order block, but it's not much of a high probability bullish order block. So we could see much really keep on going to the downside on dollar. So expect this range to be filled, the range between 101.73 and 102.38. Expect this range to be filled, and once that happens, nothing will stop dollar from taking out this old low or filling up this monthly imbalance between 99.50 and 101.32. So yeah, that's what I'm focusing in terms of dollar directional bias. I still maintain and stand with the fact that we are going to see a weak dollar as we head into the second quarter and third quarter of the year. Another thing to point out, guys, is the weakness that I'm anticipating in dollar, right? I still feel like the banking crisis, we haven't seen the worst of it. And I think the banks across the Atlantics are going to feel a bit of a wrath more than Credit Suisse has done. And in turn, that could put pressure on dollar. And also with gold testing the 2000 per ounce level, we haven't really seen the same mirrored price movement in dollar, because the rally that we have seen in the precious commodity gold testing the 2000. You can see here, I think that was when did we test 2000? Should be this today, right? Yeah, we went as high as 2009.68 per ounce. Now look at this rally here, the rally from last week, specifically Friday. See Friday rally, right? Friday's rally on gold. We haven't seen dollar index. I'm gonna go to dollar index. Let me go to dollar index, my main charts. You see, we haven't seen like almost like a mirror image of what gold did on Friday, and today testing the 2000 per ounce price point. That now gives you emphasis to say, okay, what is it that can give us a huge expansion to the downside on dollar, as in a catalyst? That's where FOMC is going to come into the picture, right? So yeah, that's how you have to look at price in terms of your approach to the market. Be that analytical. You see, your narrative should have proper concrete evidence to support what you're saying price is going to do. Of course, it can go either way, guys, but have proper confidence in what you're doing. Have proper analysis to back up your narrative, which in this case, my narrative is still dollar trading to the down side. So yeah, that's pretty much what I wanted to share in terms of dollar index. Tomorrow I'm gonna try to do another video, but focusing now on euro or either pound or NZD or Aussie dollar, one of those four. But mainly it might be, mostly it might be like euro USD and pound USD. So if I'm bearish on dollar, that also means when we look at currency pairs like UJ, we are looking for price to trade lower. 127.20 is our target on UJ. As for CHF, I would put it aside for a couple of days or for a week or so because of what has happened to Credit Suisse. And then as for USD CAD, yes, I'll be expecting USD CAD to also trade lower to 1.34 or 1.35 price points. So yeah, bearish on USD CAD, bearish on USD JPY, and also bearish on dollar index. So yeah, that's pretty much what I wanted to share with you folks, and I hope you have a great trading week and all the best, guys. Thank you.